So I took an entry in Medicure on 10th of December. So let's see what I saw before that. I have some numbers written here, some notes. So let's discuss this. Again, as usual, whenever we look at a stock, what should we do? We should do comparative analysis, technical analysis, fundamental analysis. So let us start with comparative analysis. The relative strength of the stock is 82, which is fantastic. We want this number to be more than 80. The institutional demand rating is B, which is fantastic. We want this number to be A or B, preferably A. Industry rank is 10, which is super fantastic. We want that number to be less than 40, preferably less than 20. Industry strength is improving, which means this rank was probably higher 6 months ago. So 6 months ago, it could have been, let's say, 55. Now it is 10. So the rank has declined, which means the industry strength has improved. The smaller the rank, the better is the industry, right? This number I'm talking about. Then let's look at technicals. Now, if you see the price here, and by the way, these are numbers before I bought the stock. Okay. So this is also good for my trade journaling. So if you see price here is above the 50-day simple moving average, which is the blue line, which is above the 150-day moving average, which is the green line, which is above the 200-day moving average, which is the red line. So price is above all the three moving averages, and all the three moving averages are sloping up. Okay. Next, see, this is point number one in the base. You have 6 points in the base. So that's point one, point two, point three, point four, point five, point six, and point seven. So there are 7 points in the base. And so that's why point five becomes my buy point. Point seven cannot be my buy point because point eight is not yet completed. Okay. And anyways, point seven comes in the red zone. So that cannot be the buy point. The buy point should either be in the blue zone or the green zone. So here it is in the blue zone, 6 points, more than 6 points in the base. So point number five becomes my buy point, the yellow line. Okay. So I draw this yellow line at the high of this candle. I draw another yellow line at 1% above that first yellow line. So that becomes my buying range. So blue, green, red, more than 10 candles in the base, 6 points in the base, which is more than 4 points in the base. So technically it is very strong. Blue dot, yes. What is a blue dot? Well, blue dot means 52-week high of the relative strength line. So let me show you that. Let's log into MarketSmith. So let's go to Polymed. I click on consolidated. Okay. See, this is the base that you see. Inside the base, you have this blue dot. Okay. It is important to have that blue dot inside the base. It could be anywhere inside the base, not necessarily at the right hand side. Okay. The blue dot represents the 52-week high of the relative strength line. And the relative strength line represents the strength of the stock relative to the Nifty. So if this blue line is making higher lows, okay, as it moves up, it indicates that it is performing better than the Nifty itself. Okay. So there is a blue dot. However, there is one problem. Base stage is 5. So if you see, if I click here, see this green dotted line. If I click here, it says pattern cup with handle stage 5. Actually, it should be base 5 within the stage 2 uptrend. So if I buy the stock, I am buying it late in its move. So if you see, if I go to weekly, if you see the stock was trading at around 800 rupees, sorry, yeah, in 2022, it was trading at around 651. Now it has gone to 3,000, so almost 4 times, 5 times, right? In how many years? In 2 years, less than 2 years, or slightly more than 2 years. In 2 years, the stock has given a return of 400, 500%. So we are buying it late, right? We are late in the game. Okay, so that is one weakness. Why is that a weakness? Because if you buy a stock late, there are a lot of buyers who bought the stock before and who could be booking their profits at the top. So as the stock goes into stage 1 to 2 to 3, 4, and 5, at the higher basis, it becomes more volatile. As you can see, you will see big candles like this in the higher basis. So that is a risk. That's a risk that I am taking while buying this stock. Okay. And I was fully aware of that risk. And I found a way to compensate for that risk by reducing my position size while I am buying the stock. So my normal position size is, let's say, 6.25%. So I will take half of that amount as my real position size in the stock. So roughly 3.75% would be my position size. I would not put more than that in the stock, because although it is comparatively, fundamentally, and technically strong, there is one weakness in technicals, which is I am buying it late. Okay. EPS growth 16%, 18%, 39%, accelerating. It's very good. Sales 23%, 20%, 25%, which is very good. ROE is more than 17%. Margin is improving. So fundamentals are good. Okay. Market condition is currently it's in a rally attempt. So if you go to Market Smith here, market conditions. So since 26th November, the market is trying to rally. It is not in a confirmed uptrend. Okay. Then it is industry leader in the business. Within the industry, this is the top number one stock as per market capitalization. I will show you that. Annual EPS is 15 rupees, 19 rupees, 27 rupees. You remember what I told you earlier? The annual EPS should show some positive growth. The rate of the growth is not that important. There are some pointers given in William O'Neill's book, How to Make Money in Stocks. Like the rate of growth from the latest quarter compared to previous quarter should be around 36% or minimum 25%. Okay. But I would say 3 out of 4 stocks should have some positive growth in EPS, annual EPS. That is what is written in the book. So I look for some positive growth. The rate of growth is not that important. And you notice this I have placed below. I have not placed it with the fundamentals because this is a secondary factor. The main is the quarterly. Okay. In the quarterly, the percentage rate of growth matters. In the annual, the percentage rate of growth does not matter. And this is not my opinion, by the way. This is a fact. When you look at 100 years of stock market data, this is what the data shows. Okay. So this is called as reverse factor modeling. You don't use your opinion in the market. You simply look at how market works, and then accordingly you derive some conclusions out of it. Okay. And then you create a system from that. That's called reverse factor modeling. Now let's go to industry leadership. So you scroll down, you click here, go to stocks. See, Medicure is the number one stock in the industry group. The industry group is medical systems and equipment. There are other companies, but you see the market cap is nothing compared to Medicure. This is the number one stock in the industry. In fact, this stock constitutes the industry itself. So it's an industry defining stock. Now, William O'Neill says that this is not a good thing. Like one stock dominates the entire industry. He says this is not a good thing. There should be at least 2, 3 players in the business. But that's okay. I don't want to go into that much detail as long as it is number one as per market capitalization. I am fine. I don't want to slip into analysis paralysis. Okay. Now, I bought the stock. Now, let's talk about trade execution. So, comparatively strong, technically strong, fundamentally strong. Market conditions are okay. Annual EPS is fine. Industry leadership is there. Okay. Only one weakness. I'm buying it late. Okay. So you understood the two yellow lines, right? Then I bought the stock on this day. So if you see there is a green line here, that is my average execution price. So when the price entered the yellow band, that is when I bought the stock. So the green line is my average execution price, which is 3027. Immediately I placed a 8% stop loss below that green line. So that 8% stop loss is this red line. And point number 6 in the base becomes the blue line, which is my mental stop loss. The red line is my hard stop loss, the stop loss which I keep with my broker. If the price hits that level, I am automatically out. The blue line is my mental stop loss, meaning I am watching that level. If the price starts to drop below that blue line on a 15-minute chart on high volume, I might start to reduce my position size. So as you can see, the blue line and the red line are very close to each other. So the blue line really doesn't make any sense. Drawing the blue line really doesn't make any sense because if the price begins to break the blue, it will probably take out the red very fast if it is happening on high volume. So this stock offers me a good opportunity with two challenges. Number one challenge, I am buying it late. Number two, I am not buying it tight. So there is no tightness inside the base. I have to go with the 8% stop loss. Even with a mental stop loss level, my my stop loss would be close to 8%. Okay, so two problems with this trade: late stage base and no tightness in the base. I don't have enough tightness in the base to take a 2 or 3% risk mentally. Okay, so because there are two problems in this situation, I took a half position because you need something to control your risk. And as I have been telling you since the past 4 or 5 videos, that there are two ways to control risk. One is with position size, you can reduce your position size. Second is with the movement of stop loss. So in this case, there is no scope for movement of stop loss, right? Because the stop loss is at 8%. Even the mental stop loss is close to 8%. So the only option that I have is to reduce the position size. So why would I reduce the position size after buying the stock? Why not reduce the position size while I am buying the stock itself? Okay. Because as you can see, another problem which you must have noticed here is this. See, if you join these 2 points, right? I'm not joining any points. The price seems to be drifting down below this yellow line. All of this price action is below this yellow line. Ideally, I don't want to see such kind of a setup. I will show you what I want to see. See, if you see this, it looks like this: 1, 2, and pay attention. This is very important. 4, 5, 6. This is the base. Okay. This is not what I want to see on the chart. I will tell you what I want to see on the chart. Okay. I want this to be 0.1, 0.2, then 0.3, then 0.4, 0.5, 0.6, zero point 0.7, 0.8. This is the kind of base that I would like to see in a market leader. Okay, that would give me more confidence because most of the price action is happening above that red zone. Okay, it is happening inside the blue zone and the green zone. So the overhead supply is less in the stock when you see this kind of consolidation. So as you can see, the prices seems to be drifting down. Okay, so that is why it is a risky situation, because when you are buying here, there is a above this yellow band and between this point number one, there is a buyer at every stage who is looking to get out of the stock because they want to break even on the stock. They have experienced a loss in their account. People who bought the stock between the yellow line and point number one, those buyers are called stuck buyers. That is where the overhead supply comes from. Okay, look what happened next. This is the current situation. And as expected, today is Monday morning, 6 o'clock. I am recording the video at on a Monday. Okay. So market will open in 3.5 hours at 9:15. So probably this might hit my stop loss. So if this hits my stop loss, my loss is not going to be 8%. My loss is going to be 4% because While taking the position itself, I took a half position. So how can my loss be 8%? My loss is going to be 4% if it hits the stop loss. If it does not hit the stop loss, continues to go up, okay, then I am probably safe. Then the low of this candle would probably become my mental stop loss or a hard stop loss. Now I will have a level because the stock has pulled back from here. I will at least have a technical level to watch out for. But in my experience, most probably this is going to hit my stop loss today. Even if it goes up, it will first try to take out that stop loss and then it will go up. But that is fine. The amount of loss that I book here is already compensated by the amount of small profit that I made in Zomato, because Zomato was a full position. Okay. Now, Zomato also had base stage 5, but the EPS numbers were extraordinary for Zomato. So, there I took a full position. So, you understand what I'm doing. My position size or my approach to a stock depends on the personality of the stock. My approach towards the stock depends on the character of the stock. This stock few months ago had a average daily volume of less than 200,000 shares. It is now that the stock has become a plus 200,000 share stock. So this stock has always been a volatile stock. Okay. And by the way, if you remember, I had bought this stock here and sold the stock on this particular day. This was the Muhurat trading day in India. It was start of the Hindu calendar New Year, and it was a big jump. And I sold, booked partial profits. Then came out of the stock at break even because I had moved my stop loss to break even. So this hammer candle took me out of the stock. So I have already made money on this stock. So even if I lose money here, if the stop loss hits, my net loss on this position is going to be zero. Okay. So I'm not worried with that, but I still have a chance. Given these parameters, there is a good chance that this could pull back. And if it pulls back, continues to go, enters the green zone, I might buy more of the stock. Okay. Especially if the market conditions improve. If this goes from rally attempt to confirmed uptrend, I would probably buy more of the stock. But remember, no recommendation, no tips on this channel. I'm just discussing with you my thought process as to why I got involved with this stock. So it's a medical systems equipment kind of a company. Number one in its industry, comparatively, technically, fundamentally strong. I'm buying it late and there is no tight base. That is the reason why half position size while entering itself. So there are multiple ways of managing risk. I find this to be the best, that you control your position size. Hope this video has added value to your trading journey. Thank you so much for your time. Have a fantastic day today.